February, and actually large parts of the American economy, real estate, manufacturing, shipping, actually doing quite well. Joining us now is Bill Lee, chief economist at the Milken Institute, and Dana Peterson, chief economist at the Conference Board. Bill and Dana, welcome to you both. Dana, I'll start with you. Your take on Jay Powell. Do you believe the Federal Reserve this is not a traditional slowdown. This is not caused by this or that. It's caused by people not wanting to go to work or unable to go to work because they don't want to get sick. Does the Federal Reserve have the power that it usually would in a slowdown of traditional kind?
Well, I mean, there's still tools that the Fed has, certainly using words, and such as, even if it means breaking out a thesaurus there. But I think, the key issue here is that the Fed has said that full employment is a broad and inclusive mandate. So that means the Fed's going to be looking at multiple indicators here, not just the overall unemployment rate, but unemployment rates and labor force participation for different groups, women, persons who are young, the people with low skills, different racial groups. And so I think that given the fact that, yes, we are, 9 to 10 million jobs under where we were prior to the pandemic, the Fed is still very concerned about the bottom line for households.
And I hear you on that, Bill. But here's the thing. And I've traveled extensively during the pandemic, mostly by car, sitting alone in rooms or whatever it might be. And I've noticed that there's multiple economies. California, New York, Northeast, Chicago are very different than half of America's school kids are actually in school in person, like 42%, I think, which you'd never notice if you just read the headlines. I bring that up for a reason. The Milken Conference, usually the first week in May, in person. A couple thousand people come to LA, spend a bunch of money at hotels and dinners. That's not happening. Is the Federal Reserve able to fix that? Those are the 9 million jobs.
That's what the Democrats would like the Fed to do, and it's sort of the mission creep that's been given to the Fed, because what they really need to do is fiscal policy, and fiscal policy is what can address the disparities in the economy. Brian, as you've noticed, the service sector has been crushed by the pandemic, and you know that there are 6 people working in the service sector for every person producing goods. So that means that in order for the service sector to come back, we're going to have to restore a lot of jobs. And that's what the Chair Powell is worried about, that to sustain large-scale job increases without turning on inflation. And I think one of the things that the market's gotten wrong is that the inflation fears associated with the rate increases are really misplaced, because rates are still at only 10 years at 1.3, 1.4, and it was at 1.9 at the beginning of 2020. So we're nowhere near where rates should be in a normal recovery.
Shepard Smith here. Thanks for watching CNBC on YouTube.